Hello, and welcome to another update video about XRP. XRP has rallied to the top of that initial target area that's highlighted in blue on the chart to $1.17. So the levels are currently being respected. I want to talk about that a little bit in this video. First of all, we want to zoom out a little bit and take a look at the bigger picture. We want to take a look at the overall wave count, larger degree structure, and which levels are now important. Zoomed out for our 4-day chart. I know a lot of people are currently interested in XRP. And you see that there is, even though we've moved nicely, there is not yet any confirmation of an upside breakout of the larger range that is a multi-year range, right? It's a sideways triangle. That's at least the current interpretation, which, I mean, could be complete, but it takes a break above that $2 level. I don't know why it says $2.06. I think it's rather $2. It's the swing high that formed in here 2021. Yeah, this is key. This level needs to be broken because that's a major top. That's the top. If we break above it, then I have to assume this triangle broke out to the upside earlier than this wave count would suggest. But as I explained to you before, the wave count is typically there for us to have levels that can be used for trading. And we had levels for trading here in this support region, and the price rallied from there into the first target area. And for anybody who didn't want to buy in the pullback area, I gave you in the last few videos a breakout point. A breakout point, which was this yellow line. You might recall it from previous videos. We talked about this yellow line. I explained, look, we have this triangle, this sideways range, and we can split it in half. We have this lower range, which the price spent most of its time. And then in the upper range, really not much. I mean, that's why the risk is high we break down again. You know, because it happened a few times before. The price had difficulties to stay above that level. But anyway, the idea was that once we get a break above that level, there could be a surge to our target area, which is what we see right now. As we just waited for it. It took a long time, actually, right? It took a long time. Price finally there, and this area is located between 83 cents and 117, and it's been maxed out. And doesn't mean it's not a short trade area or anything. It's just next fib levels to watch in an uptrend that is eventually expected to go into this white area, because even though it's taking the very direct path, this white target area is the ideal target for this larger rally in this triangle. Now, it becomes a bit more probable, I'd say, that we break out to the upside and then maybe, I don't know, form a more complex correction. But for now, I'm just interested in following this trend, which is up locally. Obviously, naturally, and I hope that's clear, the risk is high now, all right? So, I mean, again, it's all about, it's your strategy, right? Whatever you do with it, but the risk is now high. I mean, people are calling for $10, whatever, but be aware that first needs to be proven. The market, yeah, in a fantastic way, reacted to the support area. That's what we want. These boxes are typically there on the chart, and they can be used for trading. That means people can look for positions in these boxes, in the support areas, and then ideally we rally into the target areas, and we've done that now. And for me, it's now, okay, we haven't quite arrived at the main target up there, which is between 126 and 198, but we're likely going to get there. And then we just have to watch what the market is doing. It's going to be a decision point. If we break above $2, it will unlock other scenarios that we might discuss in tomorrow's video. Okay, I've got some ideas, like a large diagonal pattern here. I've got some other ideas, so we will talk about them tomorrow. So if you're interested in that, check it out. Register, or not register, but subscribe. Just didn't have time to bring all of these onto the chart today, but unless XRP will break out above $2 tonight, we don't need it yet. So the idea is, we have a 3-wave move up so far. And I have to assume that it might do this in one go, right? That's the idea. The idea before was, because we're tracking a triangle pattern here, that this move from the swing low in June 22 was a WXY structure. And if it's a Y wave here, then you know, the idea was then this is an ABC, but it could only be an ABC of a larger A wave, then we get a B and a C. And I think that's probably not the case anymore, not with that extension. So the idea is that it might have morphed from a WXY into a larger ABC. Now, does it change anything? Does it change any levels? No, but it means it would allow me to track it more directly. So I explain that to you now. So if this is an ABC, it's also a corrective pattern. But then the idea would be that this move up now in a C wave could be a 5-wave pattern. At least it's something to watch for. 1. This is a bit tricky. This wick, this is really annoying, this wick. But it could be a 2, 3, 4, 5. Okay. This is at least when we look at it from a high level point of view. Then we had a 1, 2, 3, 4, 5. We would need another 4, 5 pattern, which means the main support that I'm tracking right now, because I think if this is a C wave, it's an ending diagonal. I'm introducing another support area, which would be here, which I have to unfortunately measure based on the low in August. And it's going to be this Fibonacci support area located. I'm not sure if it's going to test it. I mean, in practice, the support area is very similar to the one we would have for this B wave pullback, but it's between 65 cents and 98. So the first support is 98 cents, then we have 84. That's typically an ideal target for a fourth wave, 38.2 retracement. Then we've got 74 cents and 65 cents. Any break below 65 cents would also mean that we break back below this yellow line and would be in the lower range, and that would officially mean that the breakout has failed. For now, I'm watching for a 5th wave up to complete wave C of the larger C wave in the triangle, or the D wave in the triangle, depending on which way we're counting it. Explaining all that would now maybe take it a bit too far, but one is a bullish, one is a bearish triangle. Essentially, in the short term, it didn't matter which one we were tracking. Now it becomes a bit more important, but still, for now, I'm focusing on higher, as long as we're now holding above that yellow line. It would be quite a deep pullback to test that line again, so ideally we're only gonna sort of test the middle maybe of that orange box. I guess it's becoming quite likely that we now get a bit exhausted and the pullback becomes likely. So if we get a bit more structure then and the setup presents itself, I will let you know. So hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.